So I don't think the government has any role to play in this question. There should be no laws restricting insider trading. It doesn't make any economic sense. It doesn't solve any problems that the market can't solve. And indeed, it creates enormous problems, economic problems, legal problems, moral problems. By definition, insider trading is an ambiguous, undefined term. What does it even mean? And you can go through a whole slew of court cases. If you tell me something that you read on somebody's financial statement that you accidentally saw when somebody dropped it in the subway, and I trade on that information, am I trading on inside information? Am I doing something illegal? Well, what does that mean? If I've done a phenomenal amount of research, and part of that research is talk to a lot of people and discuss these ideas with a lot of people, and some of those people have done their own research and they know stuff, and other people haven't done the kind of research I have. They haven't talked to as many people as I have. They haven't done as much research as I've had. I have more knowledge than everybody else. Does that make me an insider now? Am I not allowed to trade on the fact that I know more than everybody else? Indeed, the whole trading system is built on the fact that we disagree about the prices, that we have different information, that we've analyzed the information differently. The fact that different people have different sets of information and trade on that is what imbues prices with that information. The prices ultimately reflect the best information when we're allowed to trade on it. But we're not allowed to trade on it, it's restricted. So the point is that government has no role to play here because it's a non-objective law. There's no objective way to define insider trading. It's an unnecessary intrusion into contracts between employers and employees and between shareholders and the companies that they own the shares. It's an unnecessary intrusion into the roles of exchanges, and I'll get to the role of exchanges in a minute. And it's fundamentally driven by a false egalitarianism, a false notion of perfect information. It comes from economists who believe in perfect markets, perfect competition, perfect information. The idea there is only we could get to a state where everybody was the same, and everybody had the same information, everybody traded the same, everybody had the same IQ. But that's evil. Egalitarianism is an evil ideology. The notion that everybody should be the same is evil because the only way to get there is by penalizing people of ability, by penalizing research, by penalizing smarts, by penalizing people who know more. That's exactly what insider trading tries to do. The laws try to do. They try to go after people who are smarter, who are doing more research, who are expanding the realm of knowledge. Now, not to say that there aren't crooks. But crooks who commit fraud, there will always be ways, or stole information, there have always been ways to put them in jail. Now, people say, but wait a minute, if you allow this information, then some people won't trade, and I don't want to trade in a market where I know people that have like inside information of trading because I'm ignorant and they're knowledgeable, and then I won't participate. Maybe that's true. I think there's some empirical evidence, but it's somewhat ambiguous. Let's assume it's true, though. Who has a incentive to not let that happen? Well, I would argue exchanges have that incentive. So exchanges would then set up insider trading rules. They would say, for example, CEOs, you can't trade on information under these and these circumstances. So on. And maybe NYC sets up different rules than the NASDAQ, and maybe they set up different rules than the London Exchange. And maybe there's competition. And different exchanges have different insider trading rules. And let's see who wins. Let's see who investors really trust, and let's see which kind of market investors really want to trade in. So why not have competition for these things? Why not have a variety of different type of insider trading rules? And you could expand this to accounting rules and a lot of other things. Let's have competition around this, and maybe it all ultimately will come around one insider trading rule, or maybe no insider trading rules. Maybe not. Who knows? Now, there are some, from a fiduciary perspective, a few rules that clearly would be wrong. They would be wrong, I think, legally because of the manager's fiduciary responsibility to companies. For example, it would be wrong of me to short, that is to sell short stock in the company that I run. Because that would basically saying I'm giving up, and now I've got an incentive to run the company in the ground because that's how I'm going to make money. So managers shouldn't be making money off of the things that are under their control that are hurting other shareholders. But that's common law. That just makes sense. You don't have to have insider trading rules to do that. Indeed, it could be contractual. What if when we hired a CEO, we said, you can only trade in the stocks under these conditions. You can't buy put options. You can't short the stock. That's the condition by which we hire you. And that's kind of in the contract relationship between the shareholders and the managers. So you could talk more and more about this. You could even talk about the fact that prices would be more efficient. They would have more information if you allowed insider trading. You can also talk about the fact that insider trading is a victimless crime because there's no victim. There's somebody who sold his shares to somebody who knew more than him. That happens every day in the stock market. I hate to break it to you guys, but there are people out there who know more than you about these stocks, and you're probably trading with them, and they're probably going to make money, and you might not. So there's no victim here. And indeed, if people are concerned about, sometimes somebody benefits because they have insider information, so what? People benefit from all kinds of things. It could be part of it's part of the reward for gaining that information. You know what? Sometimes we get reward because we're lucky, because something dropped in the subway car and I happen to read it and I can trade off of that. That's not particularly morally virtuous, but it's not a crime either.